Welcome to Your Mortgage Matters TV. My name is Roger Grubb and I'm your host. I'm also the mortgage broker here at Mortgage Alliance Main Street Mortgages, located here in Newmarket, Ontario. These video sessions have been designed to help make your mortgage financing journey smoother by covering topics and providing information to help you make a more informed decision with regards to your next mortgage transaction. So why is it so important to have a good credit report? Why is it so important to manage and protect your credit profile? Well, your credit report or your credit profile helps determine the pricing you'll eventually receive when you apply for credit. The better the credit score, the lower your interest rates, the lower your pricing, and the more favorable a lender will look upon you as a borrower. There's several items that go into making up your credit profile: your payments, your capacity, the length of time that you've been reported, the type of accounts and the number of accounts, and the number of inquiries. Over the next several sessions, we'll discuss each of these items in details, give you special tips and techniques as far as how to manage those items and to ensure that your credit profile remains relatively high. This way, when you're applying for credit of any type, you'll always ensure that you're going to receive the most favorable pricing, which helps your mortgage professional find ways of lowering your cost of borrowing tremendously. Your credit score isn't the only criteria that the lender will use to determine your risk as a borrower, but it is an important one. The credit score is a statistical representation of your risk as a borrower. It was developed by the Fair Essex Corporation and is used by the two credit bureaus that are in existence in Canada, Equifax and TransUnion. It's applied to the lenders and it helps them gauge your level of risk as a borrower. It's a dynamic number and it ranges from 300 to 900. The way it works is that the closer you are to the 900 level, the more favorable terms on which you can borrow. The further away from you are from the 900, or rather the closer you are to the 300 level on the opposite end of the spectrum, means the less favorable terms on which you can borrow, and whether or not you can even borrow at all. Now that you have a clear understanding of how the credit scoring works and how a lender uses that to help them make the determination or help them make the decision on whether or not to lend, in my next video, I'll be talking more about your payments and how that impacts your score. Until next time, thanks very much for tuning in to Your Mortgage Matters TV. My name is Roger Grubb. Have a good day.